Welcome back to this crucial market update, where we dissect the intricate movements of Bitcoin and the technical posture of the USDT dominance chart. We are witnessing a high-stakes battle between the bulls and the bears on the daily time frame, which is creating significant volatility in the price action. The market structure is currently testing a major support zone that has held strong for several weeks, and this level is vital for the continuation of the macro uptrend. You need to pay very close attention to the 4-hour chart, because the Bollinger Bands are tightening to an extreme degree, which almost always precedes a violent price expansion. We are seeing a divergence on the relative strength index, where the price is making lower lows while the momentum indicator is making higher lows. This is a classic bullish divergence signal that suggests the selling pressure is exhausted and a reversal is imminent. The volume profile visible range shows us that there is a massive gap in liquidity just above the current price level, which means if we break resistance, the price could move up very quickly. Now let us shift our focus to the USDT dominance chart, because it acts as an inverse indicator for the entire cryptocurrency market. The tethered dominance has hit a major resistance trend line that dates back to the beginning of the year, and it is struggling to break through. If the USDT dominance gets rejected here and starts to fall, we will see a massive influx of capital flowing back into Bitcoin. We must also analyze the funding rates across major exchanges, because they have turned negative, which indicates that the majority of traders are currently shorting the market. When the crowd is overwhelmingly bearish, the market makers often engineer a short squeeze to liquidate those positions and drive the price higher. The open interest data shows that billions of dollars are currently sitting on the table, and this leverage needs to be flushed out before a sustainable move can occur. We are also looking at the simple moving averages on the weekly chart, and the price is fighting to reclaim the 50-week moving average. A weekly close above this level would be a definitive signal that the long-term bull market is back on track. The on-chain metrics are telling a very interesting story, as we see long-term holders continuing to accumulate Bitcoin despite the recent price dump. This supply shock is happening in the background, and it will eventually lead to a supply squeeze when demand returns to the market. You should also be aware of the macroeconomic calendar, because the upcoming economic data releases could act as a catalyst for the next big move. The dollar index is currently showing weakness, and typically, when the dollar falls, assets like Bitcoin tend to rise in value. We are approaching the 8x of a falling wedge pattern, which is statistically a bullish reversal pattern. If the price can break out of this wedge with significant volume, we could see a retest of the yearly highs very soon. The stochastic oscillator is currently in the oversold territory on the daily chart, which gives us plenty of room to the upside. We need to see the bulls step in and defend the psychological support level to maintain investor confidence. The order book depth shows a large buy wall sitting just below the current price, which should act as a safety net for any sudden dips. Do not ignore the Fibonacci retracement levels, because the golden pocket aligns perfectly with our current area of interest. Algorithmic trading books are likely to execute buy orders once we reclaim the key pivot point. The market sentiment has reached a level of extreme fear, and historically, buying when there is blood in the streets is the most profitable strategy. We are also monitoring the movement of whale wallets, and we have detected several large transactions moving from exchanges to cold storage. This indicates that the smart money is not planning to sell anytime soon, and they are confident in the future price appreciation. The Ichimoku cloud on the daily chart is currently acting as resistance, but the cloud is thinning out, which makes it easier to break through in the coming days. You must practice strict risk management, because the volatility is expected to increase significantly in the next 24 hours. The Tether market cap continues to grow, which means there is a record amount of stablecoin capital waiting on the sidelines to be deployed. Once this dry powder enters the market, it will provide the fuel needed for the next leg up. We are seeing a formation of a potential double bottom pattern, which is one of the most reliable reversal patterns in technical analysis. If the neckline of this pattern is broken, we can calculate a measured move that takes us significantly higher. The correlation between Bitcoin and the traditional stock market is starting to weaken, which is a positive sign for the asset class. We want to see Bitcoin acting as an uncorrelated asset that can perform well regardless of what the equity markets are doing. The hash rate of the network has hit a new all-time high, which demonstrates the security and resilience of the blockchain network. Miners are holding onto their coins, which reduces the selling pressure in the spot market. We are watching the exponential moving average ribbon, and it is starting to flatten out, which indicates a loss of bearish momentum. A crossover of the moving averages would confirm a trend change and bring more retail traders back into the market. The liquidation heat maps show that there is a high concentration of liquidity to the upside, and the market naturally gravitates toward these liquidity pools. We expect the price to hunt these stocks before choosing a long-term direction. Be patient and wait for confirmation before entering any new trade positions. The market is at a critical decision point, and the next move will likely dictate the trend for the remainder of the quarter. This analysis serves as a guide to help you navigate these turbulent market conditions. Welcome back to the channel for a highly specific breakdown of the hidden forces moving the market today, starting with the institutional landscape, specifically the Chicago Mercantile Exchange Futures chart, known as because we have identified a significant gap that was left open during the weekend trading halt, and historically price action has a very strong tendency to revisit these levels to fill the gap, which suggests we might see a calculated dip to close this inefficiency before the real rally begins. Looking at the exponential moving averages on the daily chart, we are currently testing the 200-day EMA, which is widely considered the defining line between the bear and a bull market, and holding this level as dynamic support is absolutely essential for the bulls to maintain control of the macro trend. Shifting our focus to classic chart patterns, we are currently observing the formation of a massive bull flag on the 12-hour time frame, which is a continuation pattern, implying that the current sideways movement is merely a pause for breath before an explosive move upwards that matches the height of the previous flagpole. Regarding the supply side dynamics, we must analyze the Bitcoin miner reserves metric, which shows that miners have stopped selling their holdings and have begun accumulating again, effectively removing a massive amount of selling pressure from the market, which creates a supply shock scenario when demand increases. Concurrently, we are watching the stochastic RSI on the weekly time frame, which is different from the standard RSI because it is faster and more sensitive, and it has just crossed bullishly out of the oversold territory, signaling at a multi-week uptrend. Momentum is just beginning. Let us now look at the Tether Treasury issuance, because in the last 48 hours the Treasury has minted billions of new US tokens, and this injection of fresh liquidity into the ecosystem is one of the most bullish signals possible, as this new money inevitably flows into Bitcoin and Ethereum, causing price appreciation. Checking the market